we're going to see financial repression, i.e. inflation rates way above the prime rates. And so for anybody with cash or US Treasuries, they're literally losing 5 to 10% a year. Bitcoin is effectively the hurdle rate.
There's a lot of new wealth looking to allocate to Bitcoin. Who are these new customers that you're talking to?
What we're really focused on is kind of the institutional market and trying to unlock the pensions, endowments, and foundations, the sovereign wealth folks.
There's this narrative now that the banks are coming.
Blockchain, not Bitcoin.
Yes.
And it's completely flipped. Now it's Bitcoin, not blockchain.
What do they think about this big vision of Bitcoin as the denominator for the world market?
So they've clearly done some research, but they are asking questions from 5 years ago.
Permissionless, the crypto industry's leading developer conference, is coming to Brooklyn this June 24th to the 26th. And this time, Bitcoin is showing up in a big way. That's right. With confidence in Ethereum and Solana on the decline, interest in Bitcoin development is riding high. And yet the way forward for many builders remains unclear. Layer 2s, meta protocols, soft fork upgrades. We'll be talking about the future of Bitcoin and how and if it needs to change. Of course, tickets are going fast. You can get them today at blockworks.co. We'll see you there. Nothing said on Supply Shock is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.
Hello and welcome to this special edition of the Supply Shock podcast, broadcasting from Bitcoin 2025, the largest Bitcoin conference in the world, happening in Las Vegas. We've got a couple of great special guests here. We've got Adam Back, CEO of Blockstream, of course, well known for his legacy contributions to cryptography. And we've got Sean Bill, Chief Investment Officer at Blockstream. So let's start with the news. A lot of announcements from Blockstream yesterday. We're at this conference. Around asset management, people tend to think of Blockstream as a technical company, right, that maybe is working on kind of code and software products. These are products that are designed for institutions. Maybe, Adam, you can tell us the strategy here.
So our history in asset management started with acquiring Terdomista's Admin Capital a few years back, and then we had a few sort of specialist products in the mining sector because at that point we were doing hosting for enterprises, and we had a lot of inbound interest from individuals, trying to mine one miner, 10 miners, like, could you host my miners? And we're like, well, there's a demand, but doing individual hosting it requires a lot of customer support. So we figured, well, maybe we could bundle the user interest into a big enterprise contract and sort of socialize the performance of it. Your individual miners will fail. So if you have 2 miners and one fails, it's a big deal. But if you have like 100 and one fails and it gets replaced a week later, you won't feel it, right? So we did that, and that was the Blockstream Mining Note 1 from 2021 to 2024, summer last year.
This is you were raising capital for the mining operations with a...
it wasn't really capital raising. It was a financial product. Okay. So basically, they were kind of buying hash rate. And we used their capital to buy miners and to pay for the power bill. So to our perspective, collectively, these users look like an institutional hosting client. Typically, they'd buy their own miners or get us to help them. And so we managed to make it fungible across all the sales tranches. And there was a secondary market on Liquid, which had, it's not high frequency, but it seemed like everybody who wanted to trade in and out for whatever reason was able to do it. And it had about 100% turnover during its lifespan. Slow down at the end, slow at the beginning, slow at the end, because it's getting closer to being all Bitcoin at that point. So that had a successful run, 30% return over the period in Bitcoin terms. It's just, good timing.
Bitcoin is hard.
Yeah, very. Well, I mean, it got a boost at the beginning because within a few weeks of it starting, there was the China mining ban. Hash rate dropped, and it was like a huge 6-month boost for everybody in mining. So that really helped out.
So you got an institutional focus around mining. Now it seems like maybe, Sean, we can bring you in the conversation. There's a lot of new wealth looking to allocate to Bitcoin. Who are these new customers that you're talking to?
Well, I think, what we're really focused on is kind of the institutional market and trying to unlock the pensions, endowments, and foundations, the sovereign wealth folks, and really trying to bring them into the Bitcoin ecosystem. We kind of feel like there's a opportunity here for those folks that are crypto curious to look at our income fund, which is really just basically making asset-based loans where Bitcoin serves as the collateral. And those loans are anywhere from 0 to 12 months, call it 25 to 65% LTVs. So they kind of are pretty low risk. It's a pretty low risk fund. And it's kind of like a good way for them to dip a toe into the market. So maybe they're not quite ready for the Bitcoin volatility of actually owning Bitcoin outright, but maybe these institutions might want to get involved in the market so they can start socializing the conversation with their investment committees. And we think that this is a great way for them to kind of ease in. They subscribe in dollars, they're providing dollars into the Bitcoin ecosystem. They capture interest in the form of dollars. Once they get comfortable with the Bitcoin exposure, they can elect to take distributions in the form of Bitcoin. And then they can kind of just slowly dollar cost average into a Bitcoin position. So we think it's a really nice product to kind of help them get into the Bitcoin ecosystem.
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risks. Terms and conditions may apply. Do your own research.
Maybe thinking more about banks and institutions. Adam, maybe turning back to you. There's this narrative now that the banks are coming. Kind of financial institutions are getting interested because of these new products that are out there. In reality, the banks have been engaging with the space for a long time, right? Maybe back in 2015, 16, 17, that looked a little different. That looked like your partnership on the data side with ICE, Intercontinental Exchange, or it looked like some of the work to try to do private blockchain type bank projects. Maybe you could tell us a bit, how has Wall Street perspective changed since then to now? What's the change?
Yeah, it was an interesting sequence there because we started in 2014, and at that point, banks were not even on the map. And within a couple of years, every major bank had some kind of fear of missing out, that they wanted to understand this technology because it could be disruptive. So they all...
But they weren't interested in like Bitcoin, the asset.
No, that was really blockchain, not Bitcoin. Yes. And it's completely flipped. Now it's Bitcoin, not blockchain. So, all the institutions are interested in bringing Bitcoin products to their customers, whether that's, advising on ETFs, putting Bitcoin into managed portfolios. I think that's still early stage. BlackRock ETF obviously is a massive success. Sean Bill was the CIO of First Public Pension Fund. I mean, he's from a hedge fund sector mostly, but for a period he ran a pension fund, and there he was able to get Bitcoin into the pension fund. But I think, that's also still early. That's literally the first one.
Yeah, only a few pension funds even allocated at this point.
Right. So I think there are many more institutions making announcements about bringing Bitcoin to their wealth management clients, and then presumably coming to a wider range of clients over time, adding it to funds. But I don't think much of that has landed yet, because it's a slow process, right? You have to develop.
Is it fair to say maybe in that era, 2015, 16, they wanted to kind of own and operate the market, right? They wanted to kind of own the technology layer. Is this kind of the banks and institutions now saying we're okay with Bitcoin being the technology layer?
Well, I think at that time they were just worried that this kind of blockchain settlement could be disruptive, so they wanted to be part of it and to understand it, and so they engaged through their R&D labs. But now, that's kind of faded, and they're focused on bringing Bitcoin assets to the market, because that's where the user demand is. All the clients of different tiers are interested in bringing Bitcoin exposure. So you see even JP Morgan, Jamie Dimon, finally, okay, you can buy Bitcoin if you want to, right? And the Vanguard CEO was like, no, never Bitcoin, and now he's not the CEO anymore. So you can see that fighting Bitcoin doesn't work out well.
Vanguard coming out this weekend saying that they're still not going to serve Bitcoin to their clients. Maybe, Sean, turning back to you, we heard a little bit, Adam, about this history, but what's happening like right now in terms of these institutions getting involved, and why is there still some institutions that are in this, they're no coiners?
Yeah. Well, I mean, so it's been interesting. Adam and I have been on the road a fair amount to meet with pension funds. And so we actually were in California a few weeks back and went to the State Association of California Retirement Systems.
Oh.
and they had 20 county pensions with probably a little over $500 billion that were there, and they had called
about
up
a quarter of the size of the Bitcoin market.
Yeah, that's right. Actually, yeah. So those folks, that 20 of them, right? That's a quarter. So those folks were had invited me out there in 2022 to talk about how we got Santa Clara VTA into Bitcoin, and they wanted to do kind of an update. And so I said, well, we got even better than an update. We have, Adam could do a panel for you guys, and that panel had, I think, maybe 600 attendees roughly. Now, there was only maybe 650 people registered for the conference. So it tells you like how interested they were in the space. 2022, maybe that was 300, 250. So it's more than doubled or tripled in terms of like the people coming to see that panel. The second panel we did was the following day. We did a panel kind of more on the technical aspects of how do you actually do this, and we actually had 30 or 35 questions from the audience, which I could definitely tell you in 2022 people were very reluctant to ask questions and not interested in really bringing those questions up at that time. We got a lot of questions.
What were some of the questions you heard?
Well, a lot of it was around like custody, reporting. How does it fit into a portfolio? How do you value it? So these are trustees. So for them and investment officers on the pensions. So for them to check a box and say, okay, we're gonna actually potentially allocate to Bitcoin. They do have to be able to explain it to their beneficiaries and their sponsor agents and all that. So they really do have to understand it. So I think what we've seen, we went out to Texas the following week, and we met with some of the pensions there, and we had probably 125 people in that room. And we did the poll. We said, hey, how many of you in the room own Bitcoin personally? And that was probably like 40 to 50% raised their hands. And we asked, how many of your institutions actually own Bitcoin, the institutions that you work for? And that was, I think, 3 or 4. So that tells you the contrast. So I think what we're seeing now is this younger generation, maybe that's kind of moving through the investment teams and moving up in the responsibilities. They're more comfortable with this idea of a digital asset.
Right.
And they're starting to socialize it more with their...
generational change.
Yeah, it's kind of a generational change, I think, to a certain extent. And I think there was also this huge kind of catalyst with President Trump's speech at Bitcoin Nashville last year, and then to Adam's earlier comment about the BlackRock ETF, having BlackRock come out and put a stamp on something really helps these pension folks because they already own BlackRock funds in their pensions. It's much easier to get an approval for a fund manager that you already are doing business with. So that speeds up things. And so that's also, I think, been a really significant boost for getting the conversation going in the institutional world, and provides a lot of maybe CYA to the consultants and the investment teams and the trustees, because people don't get fired for buying BlackRock, right? So those two elements, President Trump's comments, last year, and then having this big surge with the BlackRock's ETF, I think have really been quite good for the institutional market.
Yeah. So of course, the regulations have improved under this administration, which makes it easier for the traditional custodians like State Street and so on to custody Bitcoin. So I presume that's coming, and that will also make it easier. So improve regulations. And the other thing that BlackRock has done, other than have a successful ETF, is they've actually come out with a position paper recommending a 2% allocation.
Right, the model portfolio.
Yep. And actually, coincidentally, not coincidentally, because it's based on the fundamentals, Sean had recommended the same thing to Santa Clara VTA, which is 1 to 3%, no rebalancing. And in that context, the projection was that don't rebalance it, hold it, let it run. You manage the volatility via size, and even that allocation, if history repeated in any meaningful way, could fill in the remaining unfunded liability of that pension.
Yeah. But I think the question I have with the model portfolios, right, 1 to 2% allocation, us in the industry, we're deep into this. Most of my net worth and wealth is in Bitcoin. I think we see a future where that's going to happen, right? Essentially, Bitcoin replaces conventional currencies and finance is denominated in Bitcoin. So maybe Adam, over to you. How much are they acknowledging this big vision? Obviously it seems like we want to get them in the door. We want to get their toe in. What do they think about this big vision of Bitcoin as the denominator for the world markets?
Well, I mean, they had intelligent questions. They've clearly done some research, but they are asking questions from 5 years ago. So that in their thought process, it's still relatively early. So they're feeling a bit of uncertainty, but as Sean described, a number of their causes for uncertainty have been fixed in the last couple of years. Certainly BlackRock helps on both fronts. And I think, some of the portfolios will rebalance quarterly because they're multi-strategy. But, if they follow the approach of low allocation, no rebalancing Bitcoin would be a bad idea. You're just giving away the upside. You need to give it, a full cycle, 4 or 5 years at least.
Right. I think we've seen that already with the 13F filings. There's a lot of institutions that, they buy a bit of IBIT, then they, when the market goes down, they sell. That's what you're talking about. Yeah.
So, well, also, if they start to make a profit, they cash the profit in and then reallocate to the underperforming assets or something like that, which is the opposite thing. You see that there's a portfolio theory that works for general fixed income portfolios, and Sean was it.
Yeah.
But Sean, is Michael Saylor changing any of this? Because obviously he has put Bitcoin on the balance sheet. He's made that the primary asset of his company. Has that gotten through to institutions that this has really changed his business?
Well, I don't think the pension folks are quite there yet. But like if you think about Capital Group down in Los Angeles, one of the largest private money managers, privately held money managers in the world. They are, I believe they are the largest shareholder of MicroStrategy. And, Capital Group is a tremendous organization. I mean, they've been around forever. They do their homework. So I think they're a great representation of how Michael Saylor's been a great spokesperson for the industry and a great spokesperson for Bitcoin. And, when you start getting, shops like Capital Group as your largest shareholder, that's an impressive thing.
We heard Donald Trump and Eric Trump yesterday on stage, or Donald Trump Jr., talk about the scarcity, just how scarce Bitcoin is. So maybe, Adam, to you in this conversation, do the institutions really understand that there's only going to be 1 million Bitcoin left, that MicroStrategy has 600,000, close to 600,000 Bitcoin, and that what their entrance into the industry will mean for the asset class in terms of its appreciation?
Yeah, I mean, I think they're still getting to grips with it. The challenge for pension funds particularly is they don't like drawdowns. And so that's why the small allocation. But also, if they hold it, and Bitcoin's volatility is tapering slowly downwards, you can see it in the history there, that, 2% will become 10 or 20% in due course.
Right.
As history repeats. And
we've seen this happen with even, I think, Mexican billionaire Ricardo Salinas. He said that he allocated, and now it's 70% of his portfolio.
Right, I saw something recently. It was like, of
Bill Miller the fourth, I think, the same, right?
Yeah. So of Salinas' liquid assets, it's like 70% Bitcoin, 30% gold, and the rest is in his own company. So it's like all in effectively for his liquid. Yeah.
Yeah, and I think from a sizing perspective, just for the audience that may not be familiar with how pensions work, as a fiduciary, they have to be kind of careful how much of the volatility in the portfolios come from any one investment. Because if something does go against you, that's where the questions come in from your sponsor, your beneficiaries. So the way that BlackRock framed it, I think was actually pretty sharp. I mean, they said, look, the average Mag 7 stock contributes 4% volatility to a 60-40 pension. For each one of those holdings, right? So that's 28% of the total volatility. And so they were like, hey, if we did a 2% allocation to Bitcoin, it would contribute approximately 5% of the volatility of the portfolio. So that's kind of how they backed into their sizing, which I think it makes pretty good sense. I mean, I think that's something that you can defend with an investment committee, with consultants, with the beneficiaries, the sponsor, that, hey, this is how we were thinking about it. We were pretty methodical about it. We looked at other holdings in the portfolio. It's comparable to those. It's a technology protocol, right? So it's easy to kind of frame the conversation that way.
I want to talk about the Bitcoin Treasury companies, because that's really what MicroStrategy is, right? This is the model that they pioneered, and now it's looking like it's going to be multiplied and copied maybe thousands of times around the world, and maybe even just become standard eventually. So Adam, over to you. I know you're investing in Bitcoin Treasury companies personally. How do you think through the institutional allocators? They could buy Bitcoin, but they're not really doing that. They're either buying an IBIT or maybe a Treasury company exposure. Is that good? have a preference for how institutions allocate? It seems like most of the allocation is to an IBIT or a master. They're not buying and holding Bitcoin. It's just that's just the reality of the situation.
Well, I think it's it's difficult for an institution to self-custody. They would have to do a lot more procedural work, and so if they can use an institutional custodian or an ETF, it just simplifies. I think for MicroStrategy, they were free to spot ETFs, so that made it harder. So they had to do a lot more groundwork to get that past their Big Four auditor and the regulatory restrictions on what a public company could hold. I do think there is some aspect in some jurisdictions where a share is easier to buy for tax reasons. So I think Japan has different tax treatment for shares versus Bitcoin. There's much higher tax.
But I guess do these take away? Is this paper Bitcoin? Does this take away from the Bitcoin market, right? Because you think with some of these companies are involved in the corporate debt side, right? So some of the Bitcoin Treasury companies that are looking to buy Bitcoin, they're going out raising debt, and so the banks and financial institutions, the exposure that they have to Bitcoin maybe isn't to Bitcoin itself or even a Bitcoin product. It looks like debt of a Bitcoin company. Sean, your view?
Well, I think so I spent 20 years in the fixed income markets, and my view is, okay, if I can issue a convertible bond at 0% interest and have a conversion premium up 35 to 50%, you're supposed to do that trade all day long. Like, that's a technical dislocation in the market. If I can use that to buy Bitcoin, which I'm relatively certain is going to outperform, then I think you do that as much as you can while you can. I don't know how long that lasts, that trade, but I think that what we're seeing there is actually a pretty efficient use of capital.
This is where it all becomes kind of moon mathy for me. I don't understand the difference.
Well, I mean, if you think about it, you issue a $100 million convertible bond that you paid no interest on.
Yeah.
And you go
so
out.
I just get $100 million and I pay it back whenever.
Yeah, you can pay it back, or you can convert it into equity, right? So what happens is a convertible bond investor will give you $100 million. Your company will then go buy $100 million of Bitcoin. You need to do that very quickly. Don't let that cash sit on there because, that can give you a basis risk. So you got to get that done. And then, if Bitcoin continues to appreciate, presumably that $100 million that was invested in Bitcoin will outperform the bond, and that will drive your stock price higher. And then at a certain point, it will make sense to convert the convertible bond, hence the word convert the convertible bond into equity in the company, because you got additional growth and appreciation in that Bitcoin portfolio through that original convertible note. So that's kind of the mechanics of it. And I think right now it's very, very attractive.
Well, Adam, some people in the space are calling this kind of the next bubble, right? I was talking with Max and Stacy yesterday, Max Kaiser, of course, and he said, there's always this idea that there'll be a super cycle, and he said, I already can tell you how this cycle ends. It ends with these Bitcoin Treasury companies taking on too much risk, taking on too much debt, and creating a type of bubble. How do you see that?
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risks. Terms and conditions may apply. Do your own research.
Well, it depends how they play it. So you can see MicroStrategy learning as they go. They started with bonds, they moved on to at-the-market converts, and now they're perpetual preferreds. And also in terms of their risk management, you can see it's much more conservative than it was in the first bear market. So now they're saying they're going to stick to 20 to 30%. So 1.2 to 1.3 times leverage, and actually I think they're at 1.15 or something like that at the moment. And they do have, when they take on a convert, technically that's a debt. If it converts, that debt goes away, it becomes equity. And, when the market turns, it may not convert, right? So that remains, but they're also selling shares at the market quite heavily, which is reducing the debt ratio because, the denominator is getting bigger, right? So they're able to sort of juggle things by taking on a bit of debt, some of it converts, selling some more ATMs to reduce the ratio and doing again. So kind of laddering it forwards like that. And they are, their overall debt ratio is quite low. and their Bitcoin cost basis is also way below the current market, right? They're at 65,000 or something. And
where does that number come from? Sorry.
oh, that's just the average price at which they bought all the Bitcoins. So that's their cost. So
Still talking about MicroStrategy. Okay.
Yeah, the MicroStrategy cost, yeah. And then the other metric which kind of indicates the remaining risk is the 200-week moving average. Kind of
you love that chart.
I do like it. It's a good way to think about volatility in Bitcoin. That's the dependable floor price, approximately. And everything above that's like volatility. Now, that's creeping up, right? So the difference between MicroStrategy's entry price and the 200-week moving average is not very much, given that they are, they're only 15% long or something, right?
Okay.
Now, some of the smaller new ones, there might be somebody out there, there's starting to be a lot of them, or later entrants might push it too far with straight debt. They're all doing different things. Apparently, Metaplanet doesn't have that much debt. The blockchain group in France, they effectively have no debt in a way because they have Bitcoin basis debt, so Bitcoin basis convert. So people are experimenting and trying out different new ideas, and some of that relates to the stock market in the country they're in. So, Metaplanet is not able to do ATMs, but they're doing moving strike warrants, which is something ATM-like, and that seems to be working for them. Probably depends on the market too. Some markets have a very active retail trading environment with millions and millions of active traders. Some countries, people just rely on professional managers to manage their investments. So those differences factor in as well.
Sean, how do you look at these Bitcoin treasury companies, or how do you think institutions are looking at them? Do they see them as sort of a novelty, or what's the...
Well, I kind of think we're at the very early stages of this Bitcoin adoption and the eventual Bitcoin hyperization, Bitcoinization. So I think what we're seeing here is with Michael Saylor and the team at Strategy, they've done a really great job of kind of unlocking this model of how this could look, and they have the first mover advantage, and hence the massive Bitcoin stash, right? But now you have a lot of other folks that are trying to dabble into the space, and I think eventually, as this matures, that more of these companies, not just Bitcoin treasuries, but just corporate entities.
They're really Bitcoin companies. Right?
Yeah, well, but I think it'll spread beyond that, and it'll eventually become just treasuries have a Bitcoin allocation, just like they have a dollar or a yen or a euro allocation, right? And so I think that's what we're kind of seeing the very early stages of the development of this whole idea, the concept of Bitcoin entering a corporate treasury.
Adam, I got to ask, Blockstream, famous for having a very early Bitcoin treasury, being a company that denominated in Bitcoin. Would you consider going public and doing a public market Bitcoin treasury play?
We might entertain something, yeah. I mean, for now we're a private company and we haven't disclosed our Bitcoin position, but we may be the earliest Bitcoin treasury company. We're certainly very early in 2014 with the initial investors support.
Maybe BitPay is probably the only earlier one. But
yeah. I mean, I think the other way to think about the treasury companies is if you look at Michael Saylor's thought process, it actually applies to all the companies with large cash reserves, which is he was thinking about the inflation rate being high compared to the interest rate at that time during COVID. Now the interest rate's a little higher, but I think realistically with the amount of M2 monetary expansion, even though the inflation rates are supposedly down, we're going to see financial repression, i.e. inflation rates way above the prime rates. And so for anybody with cash or US treasuries, they're literally losing 5 to 10% a year. And so, all of the companies with cash reserve have a fiduciary duty to preserve shareholder value, and they're failing at that if they're not holding on to that cash reserve value. And effectively, over the last decade, nothing has outperformed Bitcoin. So I think in a way, the treasury companies adopting Bitcoin as part of their treasury are also using the idea that Bitcoin is effectively the hurdle rate. If you can't outperform Bitcoin, you should at least hold some of it. And, in the long run, once Bitcoin is fully adopted, of course, it won't be growing as fast because it'll be saturated. But I think it brings a prospect that, Bitcoin is the hurdle rate and you need to outperform Bitcoin slightly as an operating company, using profits to buy more Bitcoin, using that as your cash reserve in the far future. But I think in the meantime, it's effectively all the people vying to accumulate more Bitcoin via whatever means, individuals, maybe selling some investment and buying Bitcoin or borrowing some against something that's unmortgaged, something low risk to accumulate a bit more Bitcoin, is all kind of an arbitrage to accumulate Bitcoin before it gets out of reach. So I think the Treasury companies are using the corporate vehicle, corporate structures they have, the bonds, the converts, etc., to use that, beneficial access to capital from being a public company to do that same arbitrage. And so I think, the scalability of that arbitrage is enormous, because you're talking about, Hal Finney's 200 trillion addressable market of extracting the monetary premium from all different types of assets, real estate, bonds, stock market. So I think that's the arbitrage, and I think it's really scalable. So, even if Berkshire Hathaway, Apple, Microsoft, put a sizable proportion of their cash reserves into it, it's not going to make a dent. It's just because it's such a big arbitrage, right? And I think the other question which you touched on is, what is the fundamental? Does it make sense for a company to have a premium? How should we think about it? And by, dabbling in those markets, I was relatively early in MicroStrategy because I wanted to support what they were doing in bringing Bitcoin to the corporate world. I came to view it that the...
you mean you were an investor in that project?
Yeah. I mean, once they started in the Bitcoin track, I was like, let me buy a little bit of that and try to help them in a tiny way, right? And, talk to them and, think about it, how it's working, because I thought their mission to introduce Bitcoin to the Treasury use case was a useful add-on for Bitcoin as an asset. And so, I think the way to think about that is, if you are, by the time Bitcoin is fully adopted, the MNAV will be 1 or not much above it, right? Just because it's not, the big upside is because prices appreciate quickly. And so if you buy a stock, MicroStrategy is an example, at 2 times MNAV, it might be a little lower now, but that's the number. Your risk is that it drops to 1 while you're holding it, unless it manages to increase the Bitcoin per share by 2 times. That takes the risk away, and then the rest, before Bitcoin's fully adopted, is your upside. And so you want to think about, well, what are the chances of them doing that? And so you look backwards, because that's all you have, and say, well, how much did they accumulate? So if you look back to January 2024 to today, they in fact doubled the Bitcoin per share during that period alone, right? So if you say, well, full Bitcoin adoption is more than 2 years away, then you have very strong execution. They're always doing some action to bring more money in and bringing new products, the preferreds. There's always something new, right? So the execution record is good, and that makes me feel the risk is relatively low if you buy it 2 times, because they got a track record of doing that in a relatively short period of time. If you compare that to any other investment, say as an individual, like, okay, well, I'll try and buy an apartment and rent it out as an investment, you'd be looking at it like, the cost is $100,000, and how many years until the rent will pay for that investment, will pay for itself. And it's going to be like 15, 20 years, right? And here you have an arbitrage opportunity that's paying for itself, even on a Bitcoin basis, because a Bitcoin basis investment in 18 months, something like that, right? So it's actually, it's more of the Bitcoin Sharpe ratio outlier. So that's why I was saying it's like the arbitrage of the century or something, and why, even though it's hot, and some of them are commanding high MNAVs, if you look at the speed of accumulation of Bitcoin per share, you want to compare those and try and figure out the risk-adjusted view of that. But I think it is a sustainable model. Now, of course, things, the dynamic of that change through bear markets and stuff, right? So it's hotter in a bull market, clearly. But some of the instruments work in a bear market as well, like these perpetual preferreds. And a lot of, some of the companies have very low or literally no debt, in fact. So, you want to keep these things in mind. And I do think they have a little bit of capability, if their MNAV went below 1, to buy back their own shares profitably too. And of course, if people see that they might buy back their own shares, they'll try and get in front of that and buy them if they're getting cheap, right?
And we're winding down on time here. I want to get your thoughts. How do you put together the technology piece of the company with the kind of institutional piece? Obviously, Blockstream with things like Liquid and sidechains, a lot of development on the technical side. What's the vision for those 2 things merging, Sean, Adam?
Yeah, I think, or you want to go ahead? Yeah.
Yeah, I mean, so as we announced on stage yesterday, we are sort of expanding the wallet offering to cover more enterprise uses. So, the Green Wallet Suite had some kind of small business features, and we're expanding that for more enterprise workflow use cases and custody solutions. And Blockstream Capital Partners also made a sizable investment in Kameni, which is an institutional grade custodian with liquid asset integrations coming, and really the licenses, because we see that the custodian is actually the interface to traditional finance. As we were saying with the pension fund, one of the gaps they had in the past is who could be the custodian. right? But now there are more institutional grades and eventually the traditional custodian banks, because all of the assets they have in their portfolio are already with custodian, right? The shares and the bonds and so on, right? So that's the way that things are structured. And now Bitcoin is, plugging into that structure, so it's just one less bit of friction. So yeah, that's the technology part. And on Liquid, in terms of real world assets, I would say it's at the forefront because the assets on there are all organically driven. There are real investors using them.
There's like the real estate opportunities and investing and things like that.
Well, I mean, the biggest one is actually promissory notes in Mexico. It's up to 1.8 billion now, adding about 100 million a month. It's really kind of like DocuSign plus an electronic bond certificate. These are kind of corporate bonds, but they're really for small companies, in fact. And the capital is coming from two big public US banks that are not vocal about what they're doing, but it ticks a box for the risk-return profile for them. And there are 29 non-bank financial institutions in Mexico originating, placing the loans and actually providing some of the certainty about those loans. But because they are securitized and tokenized and liquid, they could resell that. They're not fungible because they're personal individual loans. And so I think really what it's done is it's captured a use case which is previously paper-based and found a business home. The other things on Liquid, apart from the mining notes that we talked about, there are a number of public market securities. So there's MicroStrategy that's been active for about 6 months. On a weekend, that will do as much volume as the Frankfurt ADR. It's the only place with 24/7 coverage. That market primarily on SideSwap at the moment, but we'll see it get integrated in some of these security exchanges, like crypto exchanges with security licensing. And it's the only place you can trade 24/7. So Metaplanet is coming, and we should see some more. So that's a new, exciting thing. The interesting thing about those markets is they're Bitcoin denominated. And that's an interesting way to price a strategy stock because basically it's a Bitcoin basis trade. You're buying it when the MNAV is low using Bitcoin and hoping to sell it at a higher MNAV. And so you have the phenomena where you might, buy some MicroStrategy when Bitcoin is 75,000 and then sell the MicroStrategy and buy back Bitcoin 100,000 or 110 and end up with a little bit more Bitcoin. This is kind of counterintuitive. So that's the kind of relative value trade it's called in traditional world. But Bitcoin basis relative value trade, which is just capturing. Of course, you can do that in traditional markets, but it's difficult because of time zones and you've got to do two trades. You've got to swap a Bitcoin ETF, or if you sell Bitcoin exchange, then you've got to wait for it to transfer into traditional rails to buy the MicroStrategy. So I think the convergence is to bring the Treasury stocks into the Bitcoin trading world, which is 24/7, has cheaper leverage, and it's a Bitcoin basis trade, which financial markets don't price equities in Bitcoin. So that makes it simpler. So you've got those things happening and many more things. There's some very successful emerging market stablecoins on Liquid. There are the new phenomena of the nodeless Lightning wallet, which is really picking up. Breeze has jumped on. Aqua, Bitcoin has a wallet. Pitch Bitcoin. So there are all these different wallets. So the fastest growing Lightning wallet is actually a Liquid wallet using the nodeless model, which is basically Bolt's exchange trustless swap between Liquid Bitcoin and Lightning. So it actually simplifies some things because you don't need a LSP and you have an always on liquidity on the Lightning side because that is actually Bolt's exchange's own liquidity. So you get the kind of performance and ease of use and reliability of wallet Satoshi without the custody. You have soft custody on Liquid, and I think soft custody on Liquid is an attractive trade-off compared to Lightning. It's federated, but it's colder. Where Lightning always has the hot wallet property, right? So I think it's quite interesting and reasonable trade-off. And also Lightning is typically, retail amounts of money. So it's not like people are storing savings on there. They're always, encouraged to cold store that on the main chain.
Well, interesting to see it all come together. The new Wall Street being rebuilt. Sean, Adam, thanks you for coming on the podcast. And thanks everyone for watching. Thanks for Roxham TV for hosting. We'll see you next time.
Thank you for having us. Thank you.